Hey there, everyone. Welcome to our Software Survivors webinar from MPC. Got our resident expert here, Kai Chen.
Hi, everyone.
And essentially, well, look, I'm gonna be blunt here. We just thought it best, given Kai's expertise is far greater than mine. I would just interview him today. And he can go through, just to give some context as well, for those of you who have used Mosaic, which is our in-house investor hub, which connects to your Macquarie, to multiple brokers, to our content delivery. It gives messages. It's a phone app, etc. You built that from scratch, right? So you've really lived the what they call vibe coding, but it's not. That's probably a crude term for it. But you lived through this process over the last sort of 3 to 6 months, where we even got frustrated enough with our developers, and we just went out on our own, and that made the process a lot faster. But you really built the cornerstone of this 5 pillars sort of framework that we brought around. But before we get started on the boring stuff, which frameworks are often boring, but how we apply them, and obviously our stocks and things, is a different thing. But so how did you, give us some context on where you came to these conclusions, etc.
Sure, and that's a really good point, building Mosaic. And I think, just giving a bit of backstory as well, you do have to know what you're doing when you are doing these vibe code tools. But it amplifies that ability, right? And that's why you're seeing a lot of these software companies really actually getting rid of a lot of the developers. It's a multiplying tool, but you still need to know what they're doing.
I said in an interview the other day, it was more like it'd be more the low-level jobs that sort of go, and really in Australia, much of that would probably be outsourced anyway. But it's the high-level engineers that still have that domain knowledge or the expertise. That are still sort of remaining. I mean, we had WiseTech and Block get rid of 30 and 40% of their staff, but it wouldn't be that high-end experience, and it would be much more that lower level stuff with the grunt work, etc. I mean, we even find here is we've only got experienced advisors who have got multi-decades in experience. So, our ability to push out content, etc., because we know where to dig, because we've lived through it before, means that there'd be less junior analyst jobs. But we actually become a lot faster because we know what the point generally is. We just need the data and the grunt work done for us fast, and AI does that fast for you. So
correct. I think so. It allows you to be higher up in the value chain as a business. And I think, if you use the tools right, it does really lower the barrier to entry into a lot of competitive fields. So I think, all the companies that we will talk about today, basically they have some sort of a advantage in the market where, it's not just built purely on code. I think that's the one key takeaway. These front-end interfaces are commoditized, right? So, there's the old argument, Xero is going to be replaced in 2 weeks. Why couldn't a kid in the garage go and build this? They can. However, that's not the point, right? Because at the end of the day, the core findings is that this is a business. And, I'll give you really good context into how, there's some of the discussions I've been in, because I've got a lot of friends who are in development. I met one of my old friends. She ended up going up to Meta in the US. So she's in Silicon Valley, and she's an angel investor. And I caught up with her the other day, and I said, how is AI going to impact the workflow in the industry at the moment? What do you think? And she's like, it's brilliant. It will amplify a lot of the abilities. But then I ask her, when you're angel investing and you're looking for these companies, have you found any ones that
we're always hunting for an early tip, but
the unicorn, right? But the amazing thing that she said, I found quite surprising. She's like, I've been through so many pitches. They have great ideas, but none of them are making money. And this was at a university event, and tons of these university graduates, brilliant. They came in with awesome ideas and the software looks great, but the issue is, the core thing is the business model. It is still, at the end of the day, a business that has to generate revenue, has to acquire customers, and has to have a competitive edge in the market. That's really the key thesis behind this.
Well, I think that's the big that's where, as a manager and owner of a couple of startups, the gap between an idea and a business is a lot of hard work, a lot of pivoting, a lot of you need money, you need revenue, you need all sorts of things. You don't the product's kind of sometimes the easiest part. Like
It's funny, yeah, because I remember back in the days, me and one of my friends, we came up with the Uber idea before Uber, but it's not about that. It's about the execution, right? Like there's so many moving pieces in a business, and also, you need to create teams, you need to create business lines, you need to generate revenue and acquire customers. That's really the key.
Yeah, I mean, and obviously raising capital, but I mean, I think the media, as always, has got a fair bit of explaining to do because my X feed now is just flooded with make $1 million in a week with Claude, sack all your staff, Claude will do everything for you, and et cetera, et cetera. But okay, I mean, we use Claude here. It is a brilliant tool, but I've got you to help me set that up, and I'm not dumb at computers, but I'm definitely nowhere near your level. But there's, this thought that the media is sort of perpetuating that you'll just, everyone will just be able to do it. Like is just, as someone who's somewhere in the middle of tech savvy, but not high level. All these things that they say they can do is. There are like a million things that can go wrong, and we saw sectors get hit. The IGV, which is the software ETF in the States, got hit something like 40-odd% against the index. We've seen it bounce back, but and there will be companies that will go by the wayside. So
absolutely, I think the thing is, in the last 2 years, we saw so much cash and funding go through the AI and tech sector. Basically every single company that was labeled an AI company, we used to joke, it's like these companies who have nothing to do with AI, they put AI on it, and it's brilliant, right? But I think the market has come to its senses and go, hey, hold on a second, let's actually, they've been actually quite punished in terms of the pricing. I think that's where the opportunity is.
Yeah.
But I think, we have to be a little bit smarter in vetting which companies are actually good.
Well, that was what we did, basically. So it was I guess I initiated the project and just gone, well, what are the characteristics? And we worked on this really well together. And, me probably not having a techie background actually helped us, push this process forward because it brought us back to, like, in simple terms, what are the 3 to 5 things that make this, which ones will survive and which ones won't. And then ironically, the threat heat map that we've got, I produced via, which, that's an example of, I can't code. I don't even know. I barely knew what the code, name was, to be honest, or how it worked. But that's an example of, where Agentic AI was really handy. But the bottom line is we still had to do the research. We still had to go through, we did that formulaic five pillars, sort of framework, which we've got here, and that, you could almost apply to not just tech and not just software, but there are a few. We intend this to be a bit of a living document over time. So it started off with, we just wanted to find the ones we wanted to buy, and then we expanded from that to 20 stocks, where 10 from each of the US and Australia. And then we went out to 50, and then we did some threats, and then we went out to some non-SaaS, and I think it stands at about 70 odd stocks at the moment. And you can filter it and do all sorts of stuff. But this framework really, you could almost apply it to most businesses, really, because proprietary data, workflow embedding, compliance barriers, domain logic, and frontier research. So we'll go through and explain those because they sound like really technical terms, but they're not really technical terms. They're kind of common sense terms, really. So run us through one by one, each of the 5 pillars.
Yeah, exactly. And, this framework is, I think exactly came about with the process of us actually vetting some of these companies, going like, what is the competitive edge for this company? Why should they remain in the sector and be one of the strong performers? And this is kind of the generalized model, right? And, really it all goes back to something that's very simple and, like from a common business theme, it's like, what's the competitive advantage, right? Because, and from specifically for the tech sector and AI, as we all know, AI hallucinates. It's only grounded by the facts and data that you give it, right?
Yeah.
So, I've heard a lot of, actually, medical industry is a very good example. It's very common where sometimes you put things into that AI and you go, wow, this just produces nothing that is valid or that is grounded in reality, right? So that's what basically the proprietary data is, because and frontier research, right? The old example is like, if you go onto Claude and go, here are my symptoms, what's my diagnosis? I wouldn't trust it.
Well, real life example is my wife's in allied health, does cancer rehab. All of that research data is locked behind pay gates or in universities, in closed networks, etc. So AI uses the data that's available to it. And what's available to it is not the good stuff, not the verified stuff. It's all the quack science stuff. So, and you're only as good as your data. Basically, if you go to IKEA and you buy a stool and you get instructions for a table, well, you can't, you're going to find it hard to build the stool. So
absolutely, I was just thinking, like, imagine Lockheed Martin and you go, how do I build an F-22? Like, it's not out there, right? So the information is not public, it's proprietary. And that's really the biggest moat for any company.
Well, even with I brought up the example a number of times with the morning report. Used to, about a year and a half ago, when everything was still human written, I could get AI to summarize 15-minute job. And lately, because the AI hallucination rate, particularly in financial markets, because it's grey, it's not maths, it's not black and white answers, it was taking me up to 45 minutes to go and verify. It was writing lines in the morning report, basically saying movements in markets that weren't even open, referencing things from weeks ago. It was horrible. So I've had to completely break down the process again and rebuild it. And we've come to so we've literally been working on this as we've been studying it. So it's almost a real life case study. But ring fencing your data to not let it reference other things is essential now, because the AI hallucination rate in finance is gone from 18 to above 30% in the last 4 or 5 months, and it's getting worse. So
and that raises a lot of security concerns as well, because the fundamental problem is that AI, the control of flow is still very difficult, and I do think maybe in the next couple of years that will improve a lot. But at the end of the day, it's probabilistic in the sense, like, you say in traditional coding or traditional tech, you say it's going to do this, it's going to output this.
Yeah.
If you tell AI to do something, there's a chance it can go down many branches, and that causes problem because you don't know which branch it will go down on. And that was one of the core thesis for the security arena, because it causes a lot of problems where with traditional safeguards, you can figure out where the vulnerabilities are, but the attack surface now becomes a lot bigger in terms of cybersecurity. But we'll touch a little bit more.
Well, it's one of those things as well. Workflow. Let's skip through. You can give short summaries if you want, but I think that probably the domain logic and the proprietary data and the frontier research are the really big key things.
Yes.
But these compliance barriers we've sort of already explained in terms of government and large enterprise. You're not just going to let an employee run loose with a Claude or there's that one called OpenClaw, which you give it access to all of your data on your computer, all your passwords and everything, and it sounds great. It'll go and do all these jobs for you. To me, that sounded horrible, because I was like, that is just the perfect scenario to get hacked and get your identity stolen, to be brutally honest with you. But there's people online going, oh, I run an e-commerce store and it handles all my shipping and it handles my website and it handles my cybersecurity, and I'm like, and lodges my lodges my BAS, and I just thought, well, that's fine until something goes wrong.
Yeah.
And I'm not trusting, like, as good as these things are, to lodge my tax, to handle your bank account. Oh my God!
Simpler, imagine letting it loose on your WhatsApp or your messaging app. Oh my God!
Yeah. So and it doesn't necessarily. It doesn't go. It's not the correct answer. It's the best answer.
Yeah.
So if it doesn't have any of the domain knowledge or the documents and things, it will make an answer up. So that error thing, but the compliance barriers, particularly like government networks or closed networks, so WiseTech, for instance, or is a good one because being plugged into ports, and you've got to be certified, ISO certified for security, etc. Because Claude, despite ethics, it's supposed to have ethics where it doesn't hack. Hackers found a way to make it hack the Mexican government and stole 150 gig of top secret data. So there's going to be compliance barriers, but connecting to those closed networks is a huge barrier. And something like TechnologyOne, which is end-to-end government enterprise resource planning, where you've got thousands and thousands of people. Again, you're not letting someone just do their own thing on the network or access to data that is confidential.
And again, that's what forms the value for the companies, right? So those regulatory approvals, the government contracts, basically where there's barriers, if it is hard to access and AI can't access it, it's actually an advantage for the company.
Well, I mean, FDA approval or AMA approval in Australia, HIPAA compliance, which is really the international code for patient privacy. So that's where Pro Medicus and Veeva are the two companies we're looking at, which will be later on. But Pro Medicus basically, while they don't have the authority to sell that data, it's not off the table necessarily for those radiology things, as long as it remains anonymous. But to get those HIPAA approvals, to get those FDA approvals, we're talking 2 years. And we saw that stock drop like nearly 70% or 65%, and they've started to win some contracts again now. And domain logic is just a fancy name for your experience in the field, I suppose. Your unique. I mean, say I've been sitting in front of screens for well in excess of 100,000 hours. Sometimes there's those repeated experiences or chart patterns or whatever that where the human brain can still skip to it and they can still call BS on a few things. But the 3 high moat sectors that we've identified was healthcare IT, and just to be very clear, not all healthcare. So these 2 in particular, Pro Medicus, because it's high margin but low cost. It's like it performs a service and takes a clip, but it's not like super expensive.
But it's also a beneficiary out of AI. Right?
Absolutely.
So I think in terms of how it operates, there's concerns obviously with cost per seat. Does having a better tool basically reduce the amount of revenue that they'll create because it's more efficient? No, but I think they're going for scale, right? Because with Pro Medicus, they have a very, very aggressive expansion plan. So as we saw a couple of days ago, that the US contracts came through. So $40 million for 2 5-year contracts. Basically, in the US, they are actually performing fairly well. So I think it is actually a very positive sign that, as opposed to focusing on per seat value, I mean, it's important because you want to monetize per seat as much as possible, but
you can't do a per seat competitor to this. Well, the FDA approval, the HIPAA compliance. What is more likely is that they will start to adopt AI to help the doctors analyze, and they've got that privacy and that closed network, etc. And then there is a possibility, if they can make it anonymous and get approvals and have all their disclaimers in place, like the data, they will have the largest database of medical imaging in the world by a long way. Like, whether they're allowed to ever monetize that or not, but if they are, oh my God, this thing is cheap.
Like they can definitely monetize that because you got to not look from the individual data set as opposed to the big scale data set. And Facebook is the perfect example of this, right? So obviously your personal information on Facebook is by yourself, but with their ads platform, they can utilize that big data as an aggregate in order to monetize, right? So it's a different. Obviously, it's not an ad model.
Well, they're not looking at going down that road at the moment, but they have outlined that it's not off the table, which I would say would mean that it's definitely on the table. But they have not. And Veeva really is like it provides data for people to do research on, essentially. So it is kind of the library. that people are they're going to have to pony up if they want their app to, if they want to build an app and they need the data, they're going to have to use them.
Yeah, so Veeva specializes B2B to the medical industry in the US. They're part CRM as well as regulatory compliance. So basically, like the more niche and specialized you get, the more higher value it is to the end customer, right? And Veeva is very specialized. You know, you can argue that is it a wrap around Salesforce? Can't you replicate this on other CRMs? No, because the issue is it is very specific to the medical industry, and that's why Veeva is very good. It's incredibly sticky. I think the retention rate's very close to 100%. Like,
yeah, no, I think nearly. I mean, excluding I don't know the cybersecurity stats, but the ERP and the healthcare IT, particularly, retention rates are in the 90s for all four of these companies.
Incredibly sticky because, again, regulatory compliance. Like, in order to get that approved in the medical sector, it is a difficult barrier. That is value for the company.
And cybersecurity, look, I'm going to let you talk about this because, look, I understand from my perspective as just a layman that it's a high value thing. I don't want to get hacked. I don't want to get ransomware.
Yeah.
I don't want my credit card data stolen, et cetera, et cetera. So I understand that, like, I'm not going to, there's no way I'm trusting something new or self-built, definitely not. But I don't necessarily understand why they're necessarily a lot better. All I know is that I think my general feelings will be most people's general feelings. You'll still want like someone who is trusted in this particular space because it's supposed to be protected, but enterprises as well. There's no way that an enterprise beyond 1,000 people is ever going to just do their own. They may use it for checks on computers to look for vulnerabilities, etc. But I mean, it changes too fast.
Yeah, I'll talk about in terms of like these two companies, and let's start off in terms of where the cybersecurity threat is. You know, traditionally it's been easy to manage because not easy, but like basically, you know, you block it from a port system, and I won't be too technical in terms of like. Traditionally, on a network side, you can go, okay, I only allow these ports in or these access points in. And basically, that's a lot of the cybersecurity in the history, how they've worked, right? But if you think about AI, like it increases the attack surface massively. So like
it'll be automated agents coming at it from all sorts of angles through different ports.
But even how it works now, like, I mean, Open Claude is basically the thing that's blowing up the internet at the moment. You know, it's very sensational and it's incredible. It's an agentic AI.
So just for the layman at home, so there is Claude AI, which is CLAUDE, which is Anthropic's model.
Yes.
Who recently was in the news with the Pentagon. There is Open Claw, which is Open CLAW, which is written by a Chinese student or something.
No, it was a German. It's a
German
person. Yeah.
Oh, okay. Sorry.
Yeah. So he was a developer. He created another PDF software that he monetized out of it. But anyways, like I think the thing that surprised everyone was this was the leap into agentic AI, right? And what's the difference between AI and agentic AI? Agency, what it means is it can actually do actions in the real world.
Yeah.
Right. And that's in a way, that's very cool and very revolutionary, but also at the same time, that's very scary because, again, what we said, if you give it agency to do what you would do, are you sure it's going to make the right decision?
Yes.
But the thing that I'm most concerned from a security standpoint is they operate off these text bases. So it's a prompt. It's basically a prompt that it goes, I have this skill and I can do this. Can you imagine if a hacker was to get in and go, let's inject some hidden instructions in here, how do you actually even control that?
Yeah.
Right? That attacks.
Oh, and the speed at which it would go as well. Yeah. So I mean, look, this is going to be an ever evolving sort of space as well. So we'll probably do updated versions of this, and I think we've covered WiseTech and we've covered Medicus and Veeva as well. I'll go back to the slide here. So we do have, for a lot of you, I don't know whether you may have seen it or not, but the interactive map where you can hover. So it literally does look like this, and you can hover over, and then it will show the stocks that say, that are how they meet the 5 pillars and gives them a score. There is currently about 70 stocks on there at the moment. And look, if you guys send in stocks and we'll run them through the filter, we can add them to the heat map. There is the intention from our point of view is to make this as I say, a living document and expand it over time. But then also, as there is a leap in technology, we will, if the 5 pillars needs to be 6, or it needs to be 4, or there needs to be an adjustment because there's a leap in technology that we didn't see coming. Then we can obviously adjust it there. So it'll be a really usable thing for your portfolio. I think that'll be a great way, because obviously, as I sent out in the EDM, was like we're trying to teach people how there's a lot of opinions out there on AI, and there's a lot of clickbait, and there's a lot of the media is trying to scare the crap out of everyone. You got the likes, Roger Montgomery basically using the guy that invented the Roomba, which was 25 years ago, is the centerpiece of his thesis. Whilst it appears really well researched, etc., like if it's on something that's 25 years old, it's a history lesson. It's not something you can use now. And he's not the only one. There is a lot of the Australian analysts out there that are really struggling with the concept of what it means for portfolios, and they don't necessarily know. So this is an effort so you can check yourself, you can see how it's applied, you can see how the scoring goes. And we, like I said, we will. It's not I think that's the mistake the analysts are making, or the media, the finance media personalities. It's like this is what's happened in history. This is the one way this can go. Well, that's just not happening. Like, this is ever evolving at a speed which is just makes the internet look like a glacier back in the 2000s. So we're really trying to help everyone have some more, that actionable advice. And the 5 pillars thing really helped me in terms of my research, because you don't know necessarily where to look, and bring it back to that sort of more scientific method, which you did with that was has made things, even the way is modified the way I'm doing my research big time now as well. So it's mpcmarkets.com.au/AI-threat-who-SAS. Anyway, there's a QR code, or you go to our website, you'll be able to find it. It's on the sliders at the front. And we do have an investment in this going on at the moment. For those of you who are S708 or wholesale investors, we have those 6 companies in pairs for the sectors, whereby, because it's an over a 12-month investment, you put down a small amount of capital for a larger notional exposure using their packaged options. And basically, if we're wrong, it caps the downside. If we're right, obviously we capture all the upside. So if you want to have a look at that in particular, that's actually at the top of the Agentic AI Threat Map, and we'll send that out.
I think it's a really smart way to play it, because basically your risk is limited on the downside. Like, if let's say, for example, you put $15,000 into this trade, if worst case it doesn't go anywhere, you lose that 15,000.
Yeah.
But if we get it right, which I think we will in the next year, that's where you can really take advantage of that. And these are very strong companies, and I think out of all the things that we looked at, they have that moat, they have that proprietary data, they have the business model for it to work. So I thought, some of the stocks are really good in there.
Yeah, well, I mean, look, we're trying to get to the Q&A now, and this is something that we've not attempted before, so you'll have to bear with us a little bit. We've hopefully got the chat on the iPad here. Otherwise, our producer Finn will help us out. Producer / analyst / broker. But there we go. So well, maybe I can read them out to you and you can answer, because I'm not probably going to answer. So question 1, which one? I've been a Pro Medicus shareholder for a long time. I've been adding to my holding over the last couple of weeks. So they dipped below 115. Appreciate thoughts on their revenue model. Well, as it pertains to the scans per radiologist, etc. I think they're talking about the seats thing. Do you think there's any significant risk to revenue growth moving forward, or any thoughts on significant benefits? I mean, you answered that one fairly quickly because we kind of answered it, but which makes it convenient.
I think they're going for more market capture as opposed to put their per seat value. I think they're a net beneficiary of AI at the end of the day. They're in terms of a business, Medicus, we've been looking at this for quite a while.
Well, I mean, it's been one of our high conviction sort of picks, and I mean, but despite the fact that with the $300, but you went on the call the other week and called it a sell, and I nearly fell out of my chair. But then
$300. I was a little bit concerned. This was before the fall, right?
But and I'm like, what are you saying? And then obviously we had the SaaS sell off, and I went, thank God you said that, because that was that was the thing about this move as well, because it was Claude or Anthropic was cap raising at the time, so they put that research paper out there, and then the AI model was literally echo chambering and flooding social media, and then obviously people then go and check what's wrong with my stock on a large language model, and it literally just feeds you more of the get out of your software, I'm the best. So yeah, but I think the risk of the revenue growth going forward at these prices, I think it's still a high PE, but it's not anywhere near as risky.
It's still a growth company.
Still a growth company, yeah. And look, sometimes the market just gets carried away. Yeah. Like we've seen the likes of Drone Shield in the last year go from 500 mil market cap to 9 billion, back to $1 billion, back to 8 billion. Sometimes the market probably just needs to chill out and realize that
price is still important, valuation is still important.
Correct. Yeah. So, but at these levels, we're buying, and we're buying via the structured investment. But and as I say, that's what we like about that structured investment is, if something comes along that we can't see, or there is a leap in technology, the singularity comes along or something, that's a joke. That's a joke for the nerds out there. Then obviously at least with this strategy, you're capping your downside a little bit. Well, you are capping your downside, but you'll need to read the documents, etc. It will close this Friday. I won't bore you with that. It is on that threat map page, which we'll send out to you all. Which layer of the software stack is most vulnerable? Infrastructure, middleware, or the application layer?
Oh, excellent question. I think that's a really, really key aspect of it when you're viewing these these tech companies as well. Front end user base, 100% right now it is at risk, massive risk. It will be commoditized. Basically, when we're talking about the front end, generally as a tech stack, you have front end, you have back end, and then you have the infrastructure that carries it, the network or however you deploy.
Which is physical. Yeah.
It could be physical, or it could be the cloud.
Yeah.
But
I mean, there's still physical servers behind the cloud, right? So
the infrastructure is always going to be the infrastructure, whether it's cloud. You need the hardware to deploy your software. Like that's just at the end of the day. And I think again,
so that'd be the least vulnerable. Basically, so the front, you're saying the front end or the application layer, definitely.
I think the back end is where all the IP and the value-driven flow sits. So that's still. I'm not saying it's good. There's a multiplier effect in that, but I don't think that will be commoditized. The front end is just, you can make any of these vibe coding tools, Replit, Cursor, Claude, any of them. You can build beautiful front ends incredibly easy now.
Yeah, and I mean that's a big thing. Like I said, the jury's still out in terms of we were a little bit, Xero didn't score particularly well, but which we were really confused about. And that's where that living document on the threat map. But I guess in a way, what it was saying was, Xero, there's all these little tiny $1, $3, $5 add-ons where you might be an app connector or whatever, which that may, that's where they make their really fat margins, I suppose, because it's just that but as a base and central point for all of your secure bookkeeping and connection to your bank accounts and all that sort of thing, it would always exist, But what could be vulnerable is that front end. I don't, and we haven't really applied customer base either, because Xero's customers are all generally very small businesses or like small medium enterprises. So they're not the most. We haven't gone down to that set of detail where we've gone. Oh well, which is the characteristics of your buyers, because that's where a seat model. Because if you own your own business, you need your own zero.
Yeah.
That's where a seat model might flourish, but with a large enterprise, if you are downing your headcount and using agents, that's where the seats model will be decimated. So it's not a one-size-fits-all argument in terms of that seats thing. Could AI collapse the build versus buy equation, making it cheaper to generate custom software to subscribe to off-the-shelf products? I kind of think that's a really broad question.
It's a similar question. It's like, why not build it yourself with Claude? Again, this ties into the moat, and yes, you can. Depends on your time and friction point, right? Like if for example, you go, I want to build zero. Can you build zero? Of course you can.
Yeah.
Build this. It'll take you a couple of months figuring out all the intricacies. Is it accurate? Is it reliable? Yeah. Is it worth $35, like $35 a month or whatever it is?
Yeah, well, that's actually one argument that hasn't really come up. Like, is it worth taking a week off work to build something that you pay $35 a month for? Like,
I think this is, and the big fallacy in software development is like maintenance as well. After you build this is an evolving piece of software.
Yeah.
Are you willing to spend the time?
And look at deployment as well. Like deployment's generally outsourced. Like ServiceNow's been belted, and the jury's still out on those as well. But like generally, big companies get someone in like that to contract to deploy the software and train the staff, etc. Because they're not they're not permanent roles. So, and then they bring then someone like ServiceNow brings like out of the box agents for you that have been verified, that they will maintain. So there is an argument potentially that ServiceNow as a major deployer or Salesforce, it could be the same thing. I don't necessarily agree on the Salesforce, but I think CRMs it's a very long conversation. I'm not a fan of CRMs. They're fancy spreadsheets. I think they might be under threat, but look, who's, again, large enterprise is probably going to stick with what they know and what's secure. Do the large incumbents like Salesforce or SAP have an advantage because of their data, or are they too slow to adapt? Salesforce, I've had quite a bit of a look into.
Yeah. I feel like they have to adapt.
But they're at the pointy end. Like they've been doing. They nearly changed their name to Sales Agent. Like they've been doing Agentic AI, and they actually released a study where they said people were not they developed this stuff, but companies wouldn't use it because they didn't know how. So that was another barrier. And apparently SAP has been described as it's like Iris is to Australian brokers. Everyone hates it, but you can't get rid of it because it's just like the reliable old workhorse. They're the two anecdotal things. So they're really they're like. But I mean, you answered that. I think the jury's still out, right, for SAP and Salesforce. Are they too slow to adapt? Yeah, maybe not.
They've got a first comers about. Well, they've had market dominance, right? So there's a lot of momentum behind these companies. I think the question is, will they adapt and how they adapt? So it's a question mark, and I know that's kind of vague and it's not really.
But unlike AI, I'd rather us answer the questions that we know than give a best answer, because
that's probably why they're in the middle to lower tier in that threat map, because it's like the jury's still out, because implementation of how they adapt will be the key question.
Yeah.
And how they change their revenue model, because I do think the traditional revenue model will have to be adapted.
So we're just going to go to we've got an offer basically, and we won't be able to do millions of them. There's been quite a big response to this, but and it'll be on the follow-up email as well. But you can scan that, or you probably just click on the email. You can upload your portfolio, and you can choose whether myself or Kai or Jonathan will do the review for you. I'm sure that most people will probably choose you for this particular one. But if you want to run through your portfolio and have a look over it, just in terms of like what are the threats and what are it's obligation free. We've got a policy here at MPC. We hate salespeople too who do pressure sales. Like we're not going to call you if you don't want to be called beyond that. However, if you are unsure about how to apply it, or you've got some questions, etc., you can email portfolioreview@mpcmarkets.com.au, scan the code or click on the link in the email, and then you can go on from there. And yeah, look, that really wraps it up. That we could have dug way deeper, but we've only got so much time.
I think there's a lot of more follow-on topics to come. As at the pace that the industry is evolving, I do think in the next year there'll be a lot more.
We'll definitely have to update that thing, and you can obviously keep up to date on Mosaic. The free content comes up, so all of our content is free. You just sign up to the app. There's no credit card or anything like that, and you can see the updates and the research come out. And if you want to pay for the recommendations, then that's another option on top. But you still get our research as it stands, and you get to see some of Kai's handiwork. But thanks everyone for joining. Thanks, mate, for for filling us in and not confusing me too much. And yeah, I guess we'll see you guys next month. Any feedback on a topic you guys would like to see for a webinar next month, let us know. And until next time.
Thank you, guys.
Feeling lost with investing? Meet Mosaic. Introducing Mosaic, MPC Markets platform that turns confusing markets into clear, actionable guidance in one place. From a single dashboard, you can see your full portfolio and track your investments in real time. Review detailed trade ideas, accept or decline with a tap, and communicate directly with your advisor when you need support. Plus, expert-filtered news and education to cut through the noise. Mosaic gives you clarity, control, and confidence in every market. Discover Mosaic today.